Hey guys, Doug the Retirement Guy here. First, I want to thank you for all your support. Subscriptions, the like buttons are all climbing high, and best of all, we're starting to grow a nice Patreon group. If anything you can do to help support the channel, we appreciate it. Click the like button, hit the subscribe, and best of all, if you can, get down and go in our description and hit the link for the Patreon. It's a $2, it's $3, it's $5. Anything that you can do to help the channel is appreciated. Today we want to review VanEck BDC Income ETF, better known as BIZD. Is this good for a retirement account? You know, it's one of these things, it's advertised at 10.56 dividend. We're not looking to get the huge dividend numbers. Everyone's out there 50 to 100%, but we want some standard regular income coming in for a retirement account. And if you don't know about BDCs, a lot of their money gets put back out. Almost 90% of their money gets put back out into dividends as a government tax program. So let's get into it. BIZD from VanEck. Basically, guys, they are one thing with VanEck, I will say right off the bat, they do things differently as of they always take a fund and try to copy it. They just try to do what the fund has been doing. So this one here is the Business Development Index, and this thing goes on forever, but MV, BDC, TRG. It really attracts all the performance of the publicly traded business development companies. The private credit exposure, BDCs lend out to small and medium private companies. They're looking for high income potential, and it's diversified. Now, the unique thing with BDC or with BIZD is they invest into other ETFs, not actually act as a BDC. So they are buying other BDCs, ETFs, and investing into them and getting money back. So the 10.55% dividend return, very solid number. They have a 9.06 30-day SEC yield because they have so much ready cash coming back in from other treasury notes, treasury bonds that other BDCs own. So they do have a regular steady cash flow. Now, this is one that we're going to get a lot of comments on that originally, the expense fees. Their actual expense fees are only 0.4. But they advertise and they put it out there because they're very upfront that they have a total expenses of 13.33%. Well, most of the fees are not paid for by someone buying this fund or taken from the fund. It is fees that they have to pay other BDCs into the funds for things that they buy or not buy. So it's a total of all the fees that the other BDCs all charge. So actual company only gets 0.4. So when you do it, you're only paying 0.4, but they have to be honest and upfront and show you the fees, even though you're not paying it. Now, this thing goes on. These are all, and you can see, Main Street Capital. We've talked about that on the channel. We like Main Street Capital. We have the Capital Southwest Corp, Goldman Sachs BDC. So there's a lot of different ones, Blackstone, that they have a lot of money tied into and a lot of investment into, but they own stocks in each and every one of these. So why BIZD? Well, it's a steady 10.56 return with a positive 9.06 30-day SEC return. So this is a steady cash flow operation. Now, the one thing I do not like about it, and that is that it's a quarterly dividend payout. And when I say quarterly, that means they're going to pay in, basically in April. And then four months later, they're going to pay again. And then they're going to pay again. And then they're going to pay again. So you have the control. You don't have the regular cash flow I like to have in a retirement fund that every month you're getting a certain amount and doing it. So this is a fund that you'll want to build around. So if this is going to pay you in April, Then you're going to try to find another quarterly that will pay in March or another one that will pay in February so that you can create a monthly income from multiple different funds. The average total returns. Let's take a look at this one. In 1 month, the share price is up 0.23%. When you go 3 months out, it's up 6.38%. Year to date, now this one here is basically from February, so they have not updated for the month of March, so it's really only 2 months into it. They're 5.53% year to date. But now look at these numbers. That 1 year, you're at 20%. 3 years, 11%. 5 years, 14%. And 10 years out, 9.63%. Now, the old adage that I was taught years ago was real simple. You take a look at any stock, any fund, any mutual fund, go out 10 years, what's the return onto it, and figure that is going to be your return all the way through, because 10 years of how many roller coaster rides from market crashes to market gains across the board, it tells you how stable a fund is. And when I look at this one, say a 9.63%, that's a pretty darn stable account across the board. When you look at this as a lifetime, which realistically is 12 years already, 8.54, I have to agree with everything they taught me, and that was this is a pretty stable fund across the board. So we put this into our calculator. We've got $10,000 worth of the stock, and this was done in March of 24, 1646 for the fund. We bought 607 shares. When we get done to it, and again, however you want to look at this, if you looked at it in February or if you look at it in March, in February, we were basically up 7%. The March Madness kicks in. We've had a bad March, and the thing is still profitable at 1.52% gain. You add in an 11.05% dividend that we were able to achieve from this for a 12.57 total return. So again, the dividend is higher than what originally projected. The return on the funds is acceptable at 1.52, just strictly because of a bad month. Because prior to that, you were at a 7% gain. So again, we look at this over time. BIZD is a Twin Peaks. It won't hold the top, but holds the bottom extremely well. So again, when we take a look at the average is 16.8 cents. The current cost is $16.71. So it's about 0.53% below average. So it's maintaining that line, which is the positive thing to have. So in my summary, basically the stock return of 1.52 after a bad March is definitely a thumbs up, because prior to that, like we said, we were at a 7% gain in the first, realistically, in 12 months. We add 13 months to it, we take a little bit of a hit. Dividend of 11.05%. I love that. The only downfall I have to that one is that it's a quarterly paying stock. I like to have monthly stocks. I like that monthly cash flow. And then a total return of 12.57. Again, another positive thumbs up. So is BDC good for your retirement account? And the answer is definitely yes. This is one of those funds I would definitely buy and put some cash into it, let it sit, collect the funds, and build off of it. Morningstar, risk is very low and safe. Like I said, the 11% dividend return, and over the past 12 months, it was steady, keeping that $16.70 baseline. Very impressive numbers across the board. We put this as a moderate buy, and I pretty much already explained to you how you want to play this one, and that is this would be what I call one of my quarterly funds that builds up particular months. So builds up my April month, and then I would try to build something up for February with another fund like this, build up my February to continuously grow each month's income. Guys, this is Doug the Retirement Guy. If you like what you're seeing, click that like button. If you want to keep with these videos, hit that subscribe button. And best of all, leave any comments you got down below. We'll answer them. We love the positives. We love the negatives. We just like listening to what our people are watching the channel and saying. Everything helps the channel grow, and we want to thank you.